who is looking at the effects of declining commodity prices on mining at today's conference. He's an analyst with the EMEA, a corporate finance group. Thank you for joining us, Douglas. So you look at individual commodities and individual companies. What are the trends that are important for South Africa?
I think one of the big trends that we sort of are observing is the dollar strength. So you've got a very strong dollar, which is obviously feeding into sort of a weaker rand. That has benefited sort of cost bases for miners in the South African sort of context. But at the same time, you've also got weak commodity prices. So it's a bit of a double-edged sword. You're having sort of a bit of relief in terms of low cost bases, but at the same time, you've got a situation where you've got lower sort of prices as well.
And there's a lot of uncertainty as well. So with the US raising interest rates later this year, and you said the other driver is China. That's got this huge appetite for commodities, but it's slowing down. Are we in for a rough ride? Can anybody predict where mining is going?
I think it is anybody's guess. I think the key question on everybody's mind is how much the current commodities are sort of reflecting in sort of Fed tightening. The consensus view is we should see tightening sort of in September, according to sort of what the expectations are. And the main question that everybody's asking is, will the dollar strengthen more, and will sort of commodity prices weaken sort of beyond that? Coming to China, and what we sort of focusing on in terms of core growth is we see sort of a growth rate of 6.8% for 2015 in terms of our latest macroeconomic forecasts, and then we're looking at 6.5% for 2016. China's been a big driver in terms of the commodities cycle, but interestingly enough, you're seeing a different shift now. The Chinese economy is more focused on consumer sort of demand, so in other words, people going out and buying goods and services, away from that export-driven economy. So we've seen diamonds sort of benefit, which is obviously good for South Africa. Gold in terms of jewelry has also sort of been a key benefactor. So there are positives and negatives out there. But again, Chinese growth is no longer in that double-digit territory that we saw sort of over the past decade, which drove the commodity super cycle.
In South Africa, we're very concerned about jobs, and this has an impact on people's lives. The sector that was once huge, it's been pulling back for years. If you look at the reasons, some people say a lot of policy uncertainty, we missed the commodities boom, we still have all these uncertainties around whether miners have to beneficiate, a debate around BEE right now. Have we scored a lot of own goals when it comes to mining, or are we a victim of these global commodity prices that you look at?
Francis, I think that's a very valid and a very pointed question. I think the way we're sort of seeing it currently is it's not unique to South Africa, so that you are having sort of headcount reductions in the likes of Ghana. We've seen sort of with the commodities decline, the miners, in order to sort of remain afloat, have had to right-size their operational footprint. Unfortunately, with that, there are tough decisions that have to be made, and often that means that you do have forced redundancies to try and at least keep some sort of jobs, or people in jobs. We've not only seen it in terms of Africa, but also elsewhere, South America, Australia. So I don't think it's a case of South Africa scoring an own goal. I think it's more of a factor that you've had sort of a steep decline in sort of commodity prices, and miners obviously having to adjust the operational profile to sort of accommodate where we are in terms of the current environment.
If you talk about Australia, it's a whole different way of mining, much more mechanized. Our miners have been saying we have to go that route, but it's a huge hot potato because so many people are employed in mining. Is that holding South Africa back, this inability to mechanize, or are we following the trend? Are we moving on this?
Francis, I think we are moving along those lines, and I think it actually has been largely sort of positive for South African sort of mining in terms of increasing profits, and ultimately that flows back to sort of government in terms of fiscal flows, so royalties, tax payments, which create sort of jobs in other sectors of the economy. We're looking sort of at Petra Diamonds Limited, which recently had a rating assigned by Moody's. They've been very successful in terms of mechanization. We're also looking at South Deep, which is one of Gold Fields' key assets. And I think it's a very positive story. They haven't given up on the mechanisation model. They're looking to upskill South African labour to meet the requirements of mechanisation.
So it is possible to upskill unskilled workers, to take them along this journey, or do we have to let so many people go?
No, I think it definitely, and I mean, we're starting to see the sort of the positive effects flow through in terms of goldfields, and as I say, we see it in the current sort of operational models. So the platinum sector at various mines has been very successful in terms of introducing mechanisation, and we're sort of seeing, as I say now, a similar sort of focus in terms of goldfields and them trying to get their model right. But again, if you look at sort of diamond mining has been very successful at mechanisation and sort of reaping the benefits in terms of a mechanised model.
All right, thank you for giving us a quick overview of our mining sector. That was Doug Rowlings from Moody's Investor Service. And staying with the miners, they were very hard hit on the market today. Amplats down by more than 4%. BHP fell by closer to 5% after it announced it was spinning off some of its assets. That happened yesterday. Despite gains in other sectors, the JSE closed a fraction in the red. Here's a quick look at your main financial indicators. We'll hear more from Moody's. Its outlook for South Africa's banking sector.